Okay, good afternoon and welcome back everyone to our options education webinar series. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And as always, at the end of every single month, instead of learning new topics, what we do is we take time out to look at what we've learned so far this month and make sure that we take the time to review and make sure that we also show you how to apply it to the real markets and what we're actually trading. So today, what we're going to do is we're going to review the topics that we discussed here in the month of July, everything to do with earnings, hedging your portfolio. We're going to review that and then also take a look at some symbols together. This is really an opportunity for you guys to submit ideas and the symbols that you want to take a look at in the context of what we've learned. And what we'll do is we'll look at them together and show you more, how to apply what we've learned here to the actual markets that you're going to be trading. So let's go ahead and get started. Before we do, just a quick disclaimer. What we're going to discuss here today is purely for demonstration and education purposes. It is not a solicitation or recommendation to buy or sell any specific securities. So the things we're going to cover here today is we're going to first start off with a quick market update. This gives everyone a bit of a preview of what we typically cover on Tuesday and Friday mornings, where we take about half an hour right before the open and we talk about what we currently see in the market, what trends are emerging, and we discuss those economic and research with you so that you have a better understanding as to how to position for this current market. Then what we'll do is we'll jump into talking about trading Q2 earnings, talking about how to add income to your portfolio, something that we discussed here a couple of weeks ago about selling cash secured puts and cover calls to generate income on your stock portfolio. And then lastly, what we covered last week, which was how do you hedge your portfolio against a market correction. So we're going to discuss all of those three topics and then give everyone an opportunity to provide symbols and ideas that you have, and we'll look at them together in the context of what we learned here this month, and then answer any questions you guys have regarding the markets. So the primary question that I think on many investors' minds at the moment is that clearly markets are in a bit of a consolidation phase between a big earnings week from a technology perspective to the fact that you have a fair amount of uncertainty in the markets around election and all of that. So right now, the question is, are markets going to break out to the upside or break out potentially to the downside? And we want to show you some of the information that we have to try to answer that question. So just to review the things that we discussed here this week, or rather this month, first, what we covered was how to purchase stocks with a discount using a cash secured put. So this is something that we covered on our income generating strategy. If you missed that, we'll show you how to catch up and watch those recordings here. But we talked about how to acquire the shares that you want to purchase using a cash secured put. So when stocks are trading at a specific price, how can you purchase them at a lower price by using a cash secured put? And then we talked about once you own those stocks, how can you get out of those investments at a profit and also at the same time generate some income while you wait for those stocks to rally? So we talked about all of those strategies and how to go about deploying them using options, so using cash secured puts and cover calls. So if you missed that, I highly recommend you to take a look at those recordings, especially if you have a long-term portfolio or investments with stocks or ETFs where you invest in the long term, because options are a fantastic tool to allow you to buy those investments at a cheaper price and then help you generate an income stream as you hold on to those assets, waiting for them to appreciate in value. The other thing that we discussed was trading earnings, because we were going into a massive earnings month, if you will. So a lot of the S&P 500 at this point has reported earnings. We do have a few big names here after the close here today. In the technology space, that's obviously going to be a big driver of potentially where markets can head next. So we discussed what we were expecting in terms of Q1, what we were expecting in terms of Q2. And we discussed this a couple of weeks ago. And since then, we have seen roughly about a 40% reduction in EPS versus last year of Q2. And what we have seen also are that beats have seen muted gains, and that misses have seen big moves to the downside. So think about stocks like Intel, Netflix, big moves to the downside when they missed, and stocks that beat barely nudged much higher. So that is the theme that we predominantly have been seeing, and we've talked about how to buy options going into a earnings play, and what are the challenges with buying an option to do so. And then we talked about how to sell an option going into earnings play and what type of challenges you have there. So we actually had 2 earnings plays this month that I'm actually going to send out an alert to take profit on today. Boeing, which was selling options, and PayPal, which was buying options going into earnings. So we really had a lot of practical applications of what we learned here this month going into that earnings event. So I hope that many of you were able to watch that recording or were able to attend that event live. If you didn't, again, I will show you how to get access to those recordings. And lastly, last week we discussed how can you utilize an option to hedge your portfolio against a market correction. Now, on that webinar last week, I asked investors, how many of you felt that the markets were going to be lower 1 month from today? And the number of you that felt that it was going to be lower versus higher outpaced almost 5 to 1. Almost 75% of you responded that you thought markets are going to move lower. Only 15% of you said that you thought markets are going to be higher. You know, I laid out on my Friday morning sessions last week why I didn't feel that markets were ready to move lower. I didn't see the risk in there. There certainly are complacency that we see in the markets that does provide an additional risk of a pullback, but nothing that looks like a major correction at the current moment. But we did discuss, if and when that happens, if and when we do see a bit of a correction, meaning something greater than 5%, the question is, how can you actually protect your portfolio? So we talked about a perfect hedge, which is a simple strategy, simply moving into cash. And this is a very low transaction cost strategy because it costs next to nothing to buy and sell stocks these days. Most brokers don't charge you a commission. So you can move into cash and move back into those assets whenever you feel that the market correction is over. That is usually the best scenario. That is usually the best strategy to use. Now, some of you, for various reasons, do not want to move into cash, and maybe you want to stay invested. So the other thing you can do is reallocate to more defensive assets. And for those of you that want to stay invested in the specific assets that you currently own, we talked about buying a portfolio hedge, buying a put option on the markets so that you can get a sense for how to utilize those hedges for your portfolio. So those are some of the things that we discussed. Now, if you missed any of those strategies, you can use the link here on the screen, which I just put into the chat window. That's how you can follow us on YouTube. So I highly recommend, for those of you that are on this webinar today, if you missed any of these previous 3 sessions, please click on that link in the chat window, click on subscribe, and then what you can do is you can also click on the notification bell, which means that every single time we upload a video, whether it's an education event like the one we have here, whether it's the morning Tuesday and Friday morning Outlook sessions, you will get an email, so you know that a new recording has been posted, and you can follow us and watch those recordings at your own pace. I know not everyone is able to make this every single Thursday. Maybe Tuesday and Friday morning markets, when they're about to open, you're busy with work. So we understand that, but we still want to make sure that you guys have access to that content. So please click on that link in the chat window, which is youtube.com/optionsplay, and make sure you click on subscribe so that you're able to see that. And we talked about hedging, and one of the biggest pitfalls of hedging is that many times investors, they try to buy puts when they're really cheap, and puts are relatively cheap right now if you try to go and buy them on the markets, thinking that if I buy them cheap, then when the market crashes, I'm able to really get some good protection. But in reality, that's actually probably one of the worst strategies, because when puts are cheap, chances are they're likely going to expire worthless. Statistically, that seems to that is the case. What you're much better off doing is, in the current market environment, when puts are cheap, sell cover calls, sell credit spreads, collect some premium, and then if and when the markets do start to correct, which, you know, where we talked about which indicators you can use to get a sense for when markets are actually stressed and starting to correct significantly lower, puts will be more expensive, but at that point you would have collected some premium. Buy those puts then. That's when you actually need it. You're actually only going to need it about 10% of the time, because markets only correct more than 5% lower only about 12% of the time. So 88% of the time, markets are not going to see a correction greater than 5%. And that's why statistically, it doesn't make sense to buy puts when they're cheap. So we talked about those things. And then when you do buy puts, how do you go and buy those puts? Which expirations, which strike prices? So if you want to learn more, make sure that you watch those recordings. Those are some of the things that we covered here for the month of July. So with that, what I want to do is I want to jump into the options, give you everyone a quick market overview. This is something, again, that we do every single Friday morning. So for those of you that catch us on Friday mornings, this is a bit of a head start for what you're going to see tomorrow morning. This gives you an understanding as to how we're viewing the markets and why in the current market environment, we don't see a real reason to be outright short the markets or looking for a short opportunity. Now, there are plenty of short opportunities in individual stocks, which we will discuss, and we will also discuss tomorrow morning, especially with this earnings season. We have seen some misses to the downside. I suggested that Boeing trade last week because I saw further downside here in Boeing. I actually think you could see some further downside in the airlines going forward. So just to give you a quick overview, what we typically look at are the major markets. We look at the S&P 500, and one of the things that we discussed here recently was that as the S&P 500 tried to push back above that 323 high, which is a resistance level that we've been talking about for quite some time, what we discussed was the negative divergence in the overall market. And that led us to believe that that was a rally that was likely going to fail. And that's exactly what we saw, and we're seeing a bit of consolidation here. Now, the thing is that the money flow remains fairly positive here on both the daily and weekly chart. So we do have still more of a bearish tone here in the market, and markets have resolved that negative divergence and looks like it's starting to try to push higher here again. So S&P 500 reacting relatively positively, starting to break above that 323 level. We'll have to see tomorrow if we can push higher here and actually break above 327. But a break above 327 really puts us within spitting distance of that all-time high of 339 or so back here in February. But at the moment, things are still fairly bullish here in the market. Granted, we don't have a lot of momentum. Things aren't really moving here. So we don't have a strong breakout. We need to wait for that breakout before we really take on substantially more long positions. If we look at the Nasdaq 100 through the Qs, one of the concerns that we've had with the Qs in the technology space is really this huge negative divergence on the weekly chart. And we were talking about this for the past few weeks. As markets continue to make higher highs, momentum could not confirm those highs and actually kept making new lows. That led us to believe that technology was going to see a bit of a drop here. And what we're seeing that right now is that markets are really consolidating, potentially trying to break out higher again, but it would really need to get above that 267, 268 level for us to see another breakout here. But markets are currently consolidating. What we're really seeing more is a rotation. And again, that is one of the markers that we typically look for to determine the health of a rally. Because as you can see, the Nasdaq 100 has pretty much had a straight line higher. Now, markets don't move in a straight line. That's not how things work. For it to take this type of move and continue moving, it has to consolidate before it can continue moving. We're seeing a bit of consolidation here over the past few weeks. That's actually good. And we're seeing rotation into other sectors like communications, healthcare, materials. This is really, the lifeblood of a market rally. And we're seeing that, which is good. And you not only see that within the sectors, you also see this between mega cap and small cap. You have IWM that's up today, that's down here roughly in line with the markets here. So small caps keeping pace with the markets here. This is something that is particularly encouraging about the current market conditions. If you look at IWM, it's peaking back above its 200-week moving average. It's recently broke above the 200-day moving average. So things are looking more positive here for the small caps, which again is strong for the overall market rally. Now, if we look at equal weight, same thing, we're seeing that as well. Emerging markets also particularly strong. We like emerging markets, and one thing that I pointed out here on Tuesday was that emerging markets, after consolidating here for the last couple of weeks or 3 weeks or so, looks like it's about to break out here to the upside. Money flow remains pretty strong here to the upside on the daily chart. Money flow just turned positive on the weekly chart. So this leads us to believe that emerging markets is where we could see some further gains here to the upside. So domestic markets, equities, relatively at this point consolidating for a bit of time, taking a breather. And again, this is normal after big moves to the upside. You get a breather, you get a move to the upside, you take a breather before it can continue moving higher. That doesn't mean that it's going to continue moving higher. It can very well fail and come down to the 302 level here. But right now we have some pretty solid support here around 320 or so. If we do get a break below 320, then that's when we could potentially revisit that 302 level. So that's the current levels that we're paying attention to right now, but things definitely more on the bullish side rather than the bearish side. So that gives you a quick overview of what we typically look at on Tuesday and Friday morning. We also cover quite a few other markets like gold, commodities, dollar, and things like that. You know, the big theme this week was really the dollar index. The fact that dollar has taken a pretty big move to the downside here. We talked about this $96 level on dollar index, which has provided support for a long time, since 2008. I'm sorry, 2018, but finally broke below that just a couple of days ago. So what we're looking for is really a continuation lower here in dollar. That's really why we have such a strong move here in GLD to the upside. We actually believe that this move to the dollar is not done. We think that there's going to be further weakness in the dollar, which is going to increase potentially gold prices, silver prices. Commodity, you know, crude hasn't moved very much, which is why we're quite bearish here on the energy markets. We've seen some pretty big moves to the downside here in the energy markets. Conical Phillips yesterday was one of the names on my watch list that broke below some major support levels and could continue to see some moves to the downside. So energy not looking particularly strong, but commodities looking very strong. And also TLT starting to break out here to the upside. You know, Mike talked about a tip trade last week or a couple of weeks ago here on CNBC. This is, again, the rates play, rates to zero. So ETFs like TLT, LQD, HYG, these are the types of names that are going to benefit from that rates to zero play. So gold, silver, all of that, even currencies. You know, you can take a look at FXE, which is the Euro ETF. So as you can see here, the Euro has been bottoming for multiple years now, finally seeming to break out to the upside. So a big move to the upside over the past couple of weeks, but I think that this could be potentially much larger move to the upside. You have moves all the way up to maybe 120 here for FXE. So these are the types of themes that we typically explore on Tuesday and Friday morning outlook sessions. So for those of you that have not joined us for Tuesday and Friday mornings, please, you can sign up using this link here on your screen, trade.optionsplay.com/weekly. Let me see if I can get a copy of this link, and I'll post it into the chat window so that you guys can sign up for this. But every single Tuesday and Friday morning, we talk about the markets, we discuss these types of topics, and talk about how you can play different ideas. So at this point, what I'll do is, this is an opportunity for you guys to ask your questions, as opposed to me sitting up here telling you what I want to talk about here today. So please bring up your chat window on the left, on the right hand, on the bottom of your screen. If you have a specific question or a symbol you want to take a look at, please feel free to type them. So if you, let's make this easy for everyone. If you have a symbol to take a look at, please type them into the chat window, and please type whether you're bullish or bearish on that symbol. If you have a question, please post it into the Q&A window, and we're gonna cover each one separately, okay? So we'll take a look at everything separately, but we will look at everything here together. So a lot of questions about, so we'll take this in order. So IBB. So IBB is still above that 136 level. So 136 is the major level that I've always referred to here on IBB. Biotech has certainly been very weak this particular week. But it still stays above 136. So my preference is still to look for upside, but I do recognize the fact that if it breaks below 136, that puts me back out of a bullish view in IBB, and I think that it's going to continue lower. So 136 is that line in the sand. If we go below 136, time to cut losses on IBB. Jim, I'm happy to send you, Jim, if you send me an email at info@optionsplay.com, I'm happy to look into that for you. I'm not sure why you're getting duplicate emails, but I'm happy to take a look. NKLA, this is something, I thought this was just all hype, and I think that this hype is somewhat over, and I think it's coming to crash down to reality. That's my view. I really don't have much to say beyond that. SPG. So, the REITs are actually coming to life a little bit here over the last couple of days. I don't know if this will last. Hard to say, but money flow looking very weak on the weekly chart, looking weak on the daily chart. There isn't a particularly strong chart here, but you do have a pretty, you do have this triangle here. Like it seems to have broken out to the upside of that triangle here. But like I said, would like to see a little bit more momentum to the upside, but I do think that perhaps this is a sector that's starting to turn around. eBay is still sticking around that 55 level. I do think it's about time to perhaps cut losses or just take profits here on eBay. So we're monitoring that position. We'll let you know how we're playing eBay. Twitter, I like Twitter. I still think Twitter is a good stock from a fundamental perspective. This 36, this recent high here around 36.5 is kind of a line in the sand here, 36. If it can stay above 36 and continue moving higher with that 20-day moving average, I like the stock. But if it breaks below 36, then I would say I would get back. I would not like this as much. Pet Med Express. I actually don't know much about this stock. I was looking at Chewy recently, which is a online pet supplier, but I do see you have some support here around 31. But money flow looking relatively weak, both on the daily and the weekly. So, long term, you do seem to have a bit of support here around 30. I would see if 30 will hold. But you do have the risk reward on the long here looks pretty good, but a break below 30, I think that's pretty ugly, and that would probably bring it back down to the 22s. Disney, Disney really hasn't really been on my radar much lately. I will say that this is not looking particularly strong. I do think that, a lot of the franchises that Disney has some problems here with ESPN, with no sports. Their streaming is doing okay. It's not really knocking it out of the park. Their parks department certainly isn't particularly strong. So I think Disney is more likely to see further downside rather than upside. That's my view here on Disney. GM. So, the auto sales numbers from an economics perspective has been pretty strong. So I'm surprised that GM hasn't really taken off very much. And as you can see, it's just trading above that $25 level. I would keep a close eye. I would first wait for a break below 25 before I go short. Because again, the numbers for car sales has been particularly strong. They haven't been bad at all. FTNT, Fortinet. So this is a stock that really has just been consolidating between 130 and 150. These types of companies, I do think that, from a fundamental perspective, has a good fundamental story, but it is a stock that has, jumped, 40% over the past couple of months. So I would wait for a breakout here. In the meantime, I think you could sell credit spreads. If it's near the bottom of that range, sell a put credit spread. If it gets the 150, sell a call credit spread. That's the opportunity that I currently see with names like this. EAF, Graphtech International. I know nothing about this stock, unfortunately, but you do have what looks like a triple bottom here at at the bottom at around 573, or let's just call it $6 or so. You have this triple bottom. I don't know anything about the fundamentals here, but if you like it from a fundamental perspective, I would look at selling a put credit spread, the $6, maybe $6, $5 put credit spread, and look for a bounce higher here. But I don't know much about this stock myself. TWOU, 2U. You know, this has had a pretty decent reversal, right? You had this long multi-year downtrend, finally broke back above that, and is really continuing to move its way higher. And it's responding fairly well to the 20-day moving average. Every single time it touches it, continues to move higher here. You do have a 200-week moving average coming in at $50. So you have some pretty big support, but that's all the way up at 50. You still have another $6, $7 here to the upside. My preference is when you play plays like this, use a call debit spread or buy a call option, because that allows you to play for further upside with the least amount of risk. I do have some concerns here because, as you can see, as you make higher highs here, momentum is not confirming those moves higher, and money flow is starting to look particularly weak here on the daily chart. That tells me that this move has a higher chance of a pullback here. I would wait for a pullback and then look for a continuation higher if you like the fundamentals of this company. Win is definitely one that's more on the bearish side, especially. I don't know if I shared with you guys some of the research that we were looking at out of Las Vegas, but looking towards the end of this year, both in terms of number of conventions that are booked in Vegas, the rooms that are booked in Vegas, and the average price booked in Vegas has actually looks really weak towards the end of the year. This is one of the reasons also why I'm not I'm quite bearish here actually on the airlines now. But I think Win falls into that same category. I do like to see a break below 70 for that move to the downside. But you know, the fact that it's currently trading up against that 21-day moving average could be the opportunity to potentially get short here, in my opinion. So fundamentally, I like the bearish view here on Win. NVIDIA just continues to climb. I don't know what to say about this much other than the fact that, you know, they make the best graphics chips in the world, and they continue to make the best graphics chips in the world. And even with Mac moving off of Intel into their own, using their own chips, they're likely still going to use NVIDIA video chips, video cards. So, you know, look for this breakout here above 424. But this is a prime example of, if you're going to chase these highs, do it with the least possible risk. How do you do that? You use a call or a call debit spread. This way you're risking, in this particular case, if I'm looking at NVIDIA, if I look at a call debit spread here and I'm playing for that breakout here, as you can see, NVIDIA is a pretty expensive stock. If I bought, let's say, a September 425, 500 call spread, that cost me $2,200. That sounds like a lot, but $2,200, $2,240 divided by $424.56 is only 5% of the underlying stock price. So for a high-flying, high beta stock like this to be able to take a bullish view, including earnings, this stock reports earnings in 2 weeks, being able to incorporate that earnings event, which is a catalyst that could potentially propel NVIDIA substantially higher, and only risking 5%, that is the type of way that you should really utilize options for your portfolio. This allows you to take a bullish view going into the earnings, and it pays more than 2 to 1. So if you are right and NVIDIA takes off, your max reward here is 5,200 while you're only risking 2,200. And if this NVIDIA just collapses for whatever reason, because you get a sell-off in the markets and technology starts to sell off, this is a high beta stock. So if you get a sell-off, I do expect NVIDIA to reverse a fair amount. You're looking at only 5% of the underlying stock price at risk. So this type of market environment that we're in right now, you have to use calls, debit spreads to play these types of breakouts, especially on stocks that are continuing to move higher. ROK, Rockwell Automation. This is one that we quite like. It failed that 230 breakout. So again, if you like the stock, we like it from an automation perspective. This is a theme that we're currently seeing as a result of COVID-19 and just a trend that we're seeing in terms of away from globalization to nationalization, where companies that have spent all these years moving their operations and manufacturing offshore are now trying to move it back onshore. And Rockwell Automation is one of the companies that provide the type of professional services and tools to allow companies to onshore their manufacturing. So that is a trend or a fundamental thesis that we can get behind. A breakout above 230 is the type of play that we would be looking for, and doing so with a call debit spread. Because again, for these types of plays, you want to risk the least amount possible. Looks like I've already covered pets, so I'll skip that. VSLR, I was looking at this earlier. This stock obviously had a pretty big move to the upside. I'm guessing that was news related because it wasn't on earnings. It has pulled back a significant amount here. I usually typically like to see a pullback towards the 20-day moving average, but considering how fast it's moved, I don't necessarily expect this to pull back that much, but it has pulled back enough, in my opinion, to potentially continue its move higher. You have very strong money flow, both on the daily and the weekly, and you have earnings here next week, so, or on August 5th. So that could be the catalyst that it needs to continue moving higher. I unfortunately don't know anything about the fundamentals of this company, so I can't comment there. VMware. I'm surprised VMware is not doing better. And if you look at the weekly chart, this looks like a massive weekly head and shoulders pattern to me. And you have this major support level here around this let's just call it 130. 130, as you can see, massive support. Coronavirus broke down below it, but it came back above. I'm more inclined to see that this might likely fail at that 130 and continue moving lower. The daily money flow, very weak. Weekly money flow, not particularly strong. So that's my view here on VMware. If you have a different base case for it, you certainly can try to make for it. But just looking at the chart here, not particularly strong. But I will say, fundamentally, it surprises me that a stock like VMware is not doing well in COVID-19 times, especially as all of us working from home and needing these types of cloud services to do so. So, but I haven't dug into the fundamentals of this company and why it's not doing particularly well. Disney, I think I've covered that. CCO, Clear Channel Outdoor Holdings, if I'm not mistaken. On TSX. So I'm not looking at any TSX stocks. I'm only looking at US stocks, Ted. You can join us on Monday mornings where we do TSX stocks for Canadian customers. So please join us then. IBB. So CRWD, CrowdStrike. This is one that I've consistently liked. It's a cybersecurity stock, which from my fundamental perspective makes a lot of sense. Recently started to break out here to the upside. So I do think there's further upside. But again, these are the types of plays that be very careful about chasing. If you're going to do so in a way with the least amount of risk. And I cannot say this enough. Use calls, call spreads. Those are the best way to chase these higher if you think they can continue moving higher. Jock wants to take a look at McDonald's. McDonald's has failed at this 200 level multiple times here. So I would like to see a breakout above 200 in order to get bullish back here on McDonald's. From a fundamental story, it makes sense why this stock should do well in this current market environment. It's unfortunate where this country is with almost 35 million unemployed. People obviously need to eat. People are very price sensitive going forward, especially as you have unemployment rolling off $600 a week on July 31st. Generally speaking, bad times is generally good for stocks like McDonald's. So fundamentally, I like it, but I want to see that breakout above 200. But also same thing, to play for further upside into that 220 level, I would do something like buying a 200, 220 call spread going out to September or October. Those are the types of plays that I would do, because if you did that, you're only risking probably 4% of the underlying stock price to buy that call option. And if you do get a move to the downside, you're only risking 4%. So those are the types of ways that I would play this. Michael's bearish on MTN, Vail Resorts. So, I mean, if I recall correctly, you know, Vail, I actually think, you know, the scale that they've built for the company should be doing well, but, you know, I really don't know what COVID-19 skiing season is really going to look like. You know, whether or not they're going to be able to open all of their facilities, what the cost is going to be. So I would tend to agree. And what I notice here is that you have $200 being a massive support level, which broke below during coronavirus, came back to retest this and got rejected at 200. That's not a particularly strong looking chart. It is revisiting that $200 level here. So just from a short perspective, you have a very good risk to reward ratio, because if it manages to get above 200 and 205, if it gets above that 200-day moving average, that's a different story. I would get out of your shorts. So you can put on a very tight stop here for a short, and you have a lot of room to the downside for a short here. You know, targets 170 to the downside, 153, 130 to the downside. So you can really buy a put spread. If it starts to go against you, start rolling those puts lower, because I do think you can have some extended targets to the downside, especially as you go into ski season. I mean, we're not quite there yet. It really is the end of November when ski season kicks off. But I do anticipate Vail would give us some more guidance over the next on the next earnings report as far as what they're going to look like. But you know, from a business model perspective, Vail has done it right as far as buying all these resorts and having the Epic Pass and really distributing their risk around, as opposed to normally ski operators have a lot of risk with weather and all the other things. Coronavirus just makes it that much worse. So I do generally like the thesis of a short Vail trade here. Too late for short verticals on BA. So, you know, I don't think it's too late for BA, because I think this move is just getting started. So, you know, one of the things that I was talking about last week on CNBC was looking for the breakdown. The reason I went short before the break below this level is the fact that if you look at BA compared to the sector, what it was doing is last Friday, which was on the 24th, it was this day, it was already making new lows compared to its sector. That's why I got ahead of it and shorted it, even though it hadn't broken its own support level yet. But now that it's broken not only the support level against its own sector, but it's now broken its own price support level, this is where I actually think that there could be some acceleration to the downside. And I see this across both Boeing, I see it on the airlines. So if you look at Delta, same thing, breaking now to all-time lows. Delta compared to XLI as well, the industrial, making fresh lows. So those are the hallmarks that I typically look for a move to the downside. So I don't think it's necessarily too late. Now that earnings are over, you have premiums that are a little cheaper. I was looking out to September, you can buy some puts for about the $5 to $7 range to buy slightly out of the money put options, looking for that acceleration to the downside, risking only about 3% of the underlying stock price to take that bearish bet. You know, you can do it using Boeing. You can also use it doing the airlines as a proxy. Any of those are suitable in my opinion. If you don't have the capital to buy Boeing, you could look at Delta Airlines. So that is one of the things that I was looking at here for Delta is, you know, I can't believe 6 months ago I was on CNBC talking about how fantastic Delta as an airline was. We were talking about it during the Q1 earnings, which was this one right here. This was on January 14th. Before coronavirus, I was talking about how fantastic the airline was. It was best of breed. Unfortunately, what's made Delta best of breed is unfortunately what's likely going to be the most challenging environment, because Delta focused on the corporate flyer. They were focusing on the premium flyer. And that is the segment of the market that is not flying right now. So if you look at Southwest, if you look at Spirit, they were not focused on corporate. They were focusing on discount leisure travel. And that's why those airlines are holding up a little bit better than the legacy airlines. But out of the three legacy airlines, it's really Delta that focused all of their strategy on that corporate, higher premium paying flyer. And unfortunately, that's the type of flyer that is not flying right now. So I do think that Delta is likely, out of the three airlines, going to have a tougher time than the other legacy and some of the discount airlines. DocuSign is still bullish. And again, typical breakout, just like the NVIDIA play, just like the other one. You know, I do think that this type of stock has gone a little too far too fast. You know, this is a stock that was trading at 80 bucks not too long ago, and now it's trading at 213. Is it worth that? I do think from a valuation perspective, I find it hard to justify, which is why the only way to play this is to buy a call or a call spread. You're risking the smallest amount of money because you do have a high amount of probability of a potential pullback here. Do you foresee any more energy acquisitions? So probably, I definitely think you're likely going to see more acquisitions in the energy space. I think you're going to see a lot more pain in the energy space. As I was showing you here today, Conical Phillips starting to break down to the downside. As you can see, daily money flow very weak. Weekly still okay here, but I think you could get some acceleration here to the downside here for a name like Conical Phillips. Bullish on VRTX, Apple, and Team. So, okay. Let's try to take a quick look at those. Vertex, you know, the pharmaceutical space, particularly okay. You know, I don't know too much about this specific pharmaceutical, but the one thing I will point out here, as prices kept moving higher, momentum was moving lower. That's a concern, and we've seen that resolve itself. Now, maybe that's resolved and it's now ready to continue moving higher, but I don't know a whole lot about the fundamentals of this. You do tend to find that moves below the 20-day moving average provide buying opportunities. The weekly chart remains fairly strong, so I do like that. So if you like the fundamentals, this might be a good opportunity to buy. Apple, what was Apple? Wow, 402 post earnings. So Apple up quite a bit. I think that's good news for the tech sector. I think this is probably the slump that the tech sector needed to continue moving higher. You're obviously going to see the Nasdaq 100 substantially higher than the S&P tomorrow as a result of this. This is not surprising. I think Apple's new strategy with what they're planning on doing with the MacBook Pro, what they're doing with, you know, really diversifying their business into services, what they're trying to do in terms of selling more iPhones through more financing programs. They now have that, the Apple credit card. They're getting into financial services. You know, long term, this is, in my opinion, a great investment. And I think you're going to continue to see names like Apple to do well. Team hasn't been particularly strong. You know, this was a nice move to the upside, but really has started to lag behind the technology sector. So unless it can break above this 200 level, I'm not a big fan of this particular stock. It can come back to life, but I'm not seeing you know, the momentum that suggests that right now. Joseph, thank you so much. I really appreciate it. Roku, let's take a look at Roku. Bearish on Roku. Now, Roku hasn't been particularly strong, especially on the weekly chart here. And during this consolidation phase, momentum continues to move to the downside. So I wouldn't disagree with the potential pullback here for Roku, but you know, streaming continues to be strong. Roku is doing particularly, you know, I've always never could get a good read here on Roku. It just never really made a lot of fundamental sense as to why this company would do particularly well or not do particularly well. It just kind of trades in a bit of chop. So I haven't really touched this stock very much, in my opinion, because it is just very choppy and doesn't seem to have a clear sense for a direction. Rio Tinto. What is Rio Tinto? Oh, it's Rio Tinto, Rio, yeah. You know, the mining stocks have been doing particularly well. And this stock looks like it's finding a little bit of support here around the 20-day moving average. Money flow looks strong, both on the daily and weekly chart. Weekly chart looks particularly strong recently, but you do have this massive resistance around 62. I'd like to see a breakout here. If you do get that breakout, I think you're off to the races. PayPal. PayPal, it's time to take profits. I'm going to send out an email tonight to take profits here on PayPal. It was a bullish bullish earnings play. We got the move to the upside. Time to take your profits. Any hope left for Intel? I was asking myself the exact same question, because I do think as much as the earnings report, you know, dinged Intel, I still think Intel has some advantages as a manufacturer, as not just you know, from an intellectual property perspective. So the fact that this stock has now dropped roughly 20% from that $60. I do think it's interesting to start taking a look at Intel as a potential buy. Especially, I wouldn't buy Intel, the stock itself. What I would do is I would look at selling puts and selling put spreads. It does pay a decent dividend now. So I actually am interested in Intel. I'm not sure I'm ready to pull the trigger on it yet, but I certainly still think that there's value in this particular stock. Amazon. I remain bullish on Amazon above 3,000. And Amazon reports earnings, looks like it's up to 3,200. So I like Amazon. From a fundamental perspective, you had this recent consolidation. I expect that you're likely going to see a breakout here to the upside. You're probably going to get a bit of continuation to the upside here tomorrow. So Amazon, it's hard to bet against Amazon, to be perfectly honest. NCLH, Norwegian Cruise. This falls into the same category as the airlines here. I don't know how people are going to be comfortable getting back on cruises. I think you're more likely to see perhaps another move to the downside here on the cruise, just like the airlines, before things get better. EA had a pretty nice move here to the upside today on earnings. I do think that EA could potentially break out here to the upside. But I like EA. The only thing I will say about EA is that the options aren't very liquid. So as I've looked at this stock so many times, tried to find a strategy, and then found that the bid-ask spreads were this wide. So it's a nice stock. I just find it hard to trade options on it. WKHS, which I know nothing about, Workhorse Group. So unfortunately, I know nothing about the stock. I don't even know what sector it's in, but I can tell you that it's kind of consolidating here. I would wait for a breakout one way or another. I just don't know anything about the stock. DRN, Daily Real, what is it? Daily Real Estate Bull. So again, XLRE got on my radar here today. You know, real estate really hasn't been much of a interest to me, but you know, it looks like it's starting to maybe potentially break out to the upside. It's contending with the 200-day moving average. It's managed to break out above that weekly channel. So I do think that real estate could potentially have that move to the upside. What was this symbol? DRN. This is a leverage real estate ETF. You know, I'm not a big fan of the leverage ETFs. If you're going to trade them, you're better off trading them, the stock itself, just simply because they don't provide 3 times returns over a long period of time. They only provide 3 times returns over a single trading day. Nabil, a lot of stocks. So Peloton, this is one stock that's on my radar. I think Peloton reporting earnings next week could potentially, or rather a couple of 2 weeks from today on August 12th, I think this stock can continue moving higher. You know, I've been an owner of a Peloton for about 4 years now. I still, to this very day, think it's one of the best machines made. You know, Lululemon bought Mirror. I don't think that compares at all. You know, what Peloton has been able to build, not only from a machine perspective, but more importantly from a social perspective, and making working out a social experiment, a social process, even though you're at home, has not been replicated. And I think that's the secret to their success. They've done it with multiple products now, and I think they're just, and I think coronavirus, if anything, accelerated this social community that they've built out a result of it. And I think this is a long-term play. So I like Peloton. Would you have any suggestions on a commodity ETF, say metals or agriculture? Well, we talk about GLD and SLV a lot here on this. So, you know, those are the plays that I would look at. And silver has really pulled back a little bit. Not quite enough, but, you know, I have a long gold position that I've been in for quite some time. We've been talking about gold here for a long time, but silver, you know, I do think silver has a lot more potential to the upside, because as you can see here, going back to September 2011, the high here for silver is 48. Here it's only trading at 21 versus GLD. You're already back to all-time highs. So I'm curious to see how gold responds to this, if it can continue moving higher. My hunch is that it can, because I think dollar is going to continue to weaken, but I do see further upside in silver than in gold at the moment. PP and FDX. I don't know what PP is, but I'll look at Fedex, because Fedex has really come back to life. As you can see here, it really was a dog for a long time. You know, their play on being more express shipment clearly did not work out as well as UPS, which focused on cheap ground shipment. Amazon dropping FedEx obviously didn't help, but recently breaking out to the upside. FedEx spending a lot of time investing in their ground delivery, starting to pay dividends here. So I do like FedEx. I think FedEx can continue to move higher here, and perhaps this is a bit of a turnaround here. Kent, AGQ, what is AGQ again? Ultra silver, long silver, okay. So, I mean, if you choose to play silver using a leverage ETF, by all means, I showed you what my views are here on silver, but it's your choice to use a leveraged ETF here. Space, this is an interesting one. This is one that I was looking at here earlier today because, you know, I missed the breakout here on space, but, you know, and I traded space during the initial breakout here. It was a very volatile few days. I was in and out of position very, very quickly. Space, you have this major resistance level here around this 20, 21, 22 level here, broke out above it, is coming back to retest this as support. And that, I think, is a pretty good, from a risk reward perspective, a pretty good entry point, because if it breaks below that level, I would get out, right? If it goes down, I would just simply get out. I would risk just a couple of bucks to the downside. And I think you'll have quite a bit of room to the upside. You know, this is one of those really speculative plays where, you know, you should allocate a relatively small portion of your portfolio to, but if you want to play it, I think this is a nice setup. And I quite like the timing on this right now. What does the bottom part of your chart represent in green? It's the Chaikin money flow. It's the indicator that I'm using here, is the Chaikin money flow. It's pretty standard on most technical charting packages. The green is the Chaikin money flow. ZTO, I know nothing about this stock, so it looks like this is an ADR for ZTO Express. I have no idea what ZTO Express is. You know, weekly chart, looking very strong. Daily chart, not particularly strong. You've had this consolidation period. So, you know, but what you typically have here is, for stocks that make big moves to the upside, is consolidation periods. And what you want to see is a breakout of that consolidation before you go long. You have not seen that breakout yet, but you might see it in the next few days. So keep an eye out here for this. TTD, is that the trade desk? Yeah. Trade desk, you know, still does very well. You know, the trade desk is in the trading space. Obviously, higher volatility, I do think, is good for them. I do see the support here around this 400 level. Look for a potential breakout here to the upside. I think you have a very similar setup here. You have this long straight move to the upside, and then you have a recent consolidation period, and then you want to see a breakout here to the upside in order to continue, but you have not gotten that breakout just yet. AMD, I think AMD has gone a little too far too fast. I'll be honest. I like the stock. I think there's a lot to gain out of this stock. I think they've been running circles around Intel lately. But as you said, it is quite overbought here. As you can see, RSI substantially overbought. So I do think that you're going to get some bleed off of that momentum here for AMD. I'm bearish on NOC. So the aerospace company is not particularly strong, but you know, obviously here on earnings moving particularly higher, this could be an opportunity to short, because as you can see, weekly chart very weak, right? And you've got this pop higher, and sometimes, you know, we want to always be counterintuitive. Buy low, sell high. So you've got a high in a relatively weak bearish trend. These are your opportunities to sell. When you get these pops higher, those are sell opportunities. And this could very well be an opportunity to short. The sector, not particularly strong. Granted, Northrop is more on the defense side, and defense spending is looking relatively okay at the moment. But aerospace as a whole, not doing particularly strong. So the pop-up higher here could potentially be a short opportunity. Etsy, you know, continues to do very well. And I particularly like this pullback here, and then kind of a bit of a consolidation, and is now starting to move higher here. So you had that consolidation starting to move higher here. So I like Etsy. I will say that it is time to start revisiting the fundamentals of some of these coronavirus plays. You know, the stock itself has gone from 50 bucks to 112. Has revenue risen that much? I don't think it has. So be careful about what type of valuations you're starting to pay for some of these stocks, because that is a concern of mine going into some of these stocks. Like Zoom, I have some concerns about the valuations here for Zoom because revenues have not grown by this amount. The stock has gone up from 100 to 260 or 250, but revenues have not grown 150%, 200%. So does it make sense to pay for stocks at these types of valuations, or is a reckoning coming? So Zoom looking quite precarious here. The daily chart looking a bit like a head and shoulders formation. It hasn't broken that neckline yet, but that is one that I'm paying attention to. Kodak, I'm not even gonna. I really have nothing to offer here. This is a stock that, was trading at $2.60 for a very long time. Government contract came in and the stock rallies, and it's all hype. And I don't know what to do with this, other than it's a fantastic, interesting chart to look at. Micron, this is one that I was looking at because, I haven't seen a chart consolidate for this long in a long time. And fundamentally, I like the stock. But it just trades sideways. So I'd like to see that breakout here. So if you're going to play Micron, sell a put credit spread here is the way that I would play this. You have a pretty strong kind of channel here. When it's near the bottom of the channel, selling that put spread, looking for a potential breakout. I do think this could potentially break out to $60 here to the upside, but I really haven't seen a consolidation this long in a stock for a long time. DDOG, Datadog, I know nothing about this stock. After a consolidation period, looks like it's starting to break out here to the upside. That could be the push that you need to get above that $98, but I don't know anything about this stock. I do know a little bit more about Lululemon. One thing I will point out here is Lululemon continues to move higher. Momentum is not confirming that. You have some pretty big negative divergence on both the weekly and daily charts here. Money flow still remaining okay, pretty positive here. So I am more bullish here on Lululemon. The apparel companies are still doing okay here at the moment, and Lululemon certainly standing out from the apparel space. We'll see whether this lasts. I do have some concerns that the momentum here has kind of waned a little bit. And also look at fundamentals. Look at, has revenue grown as much as the stock price has? My guess is that it hasn't, but we'll take a look. Johnson & Johnson, not very uninspiring chart. This chart is a very sideways chart. My preference for stocks like this is when it gets near the top, sell a call credit spread. When it gets to the bottom, sell a put credit spread. And that's how you play it until you get a breakout. And I don't particularly see a strong view here for Johnson & Johnson to break out one way or another here. Earnings just put it back into that trading range. It's now back in that range. Not a particularly strong chart. Sorrento Therapeutics. Sorrento is one of the stocks, if I'm not mistaken, going after the coronavirus vaccine. Looks like it's about to break out here above that 8.5. Could get an acceleration here to the upside. 8.5 here is you do have some pretty solid resistance here in this particular level. So if you do get a breakout, there is a potential much bigger move here to the upside. But again, for this types of plays, SRNE, buy a call or a call spread. You can probably go out to December, buy a slightly in the money call spread, or maybe a call, and pay, in this particular case, you buy the $8 call, sell the $13 call. You're not paying a whole lot here. You are paying about 12% of the underlying stock price, 15% of the underlying stock price, but this is a stock that can move. So those are the types of ways that I would play this types of move. Okay, so many more. Wow, fantastic. So many symbols. Okay, I'm really trying to get through as many symbols as possible, but I obviously can't get to all of them. And many of you are asking ones in similar veins, like Lockheed Martin, similar to Northrop. This is the aerospace sector, not particularly strong sector. I don't see a strong catalyst for these stocks to continue moving higher. T-Mobile, we're still in that T-Mobile trade. I still like this particular stock. It is consolidating. I'm looking for that breakout here on earnings. So I'm still holding on to that. I think I've covered a lot of these. I've talked about GLD, AMD, Home Depot. Home Depot continues to be just a really strong performer, breaking above that 260 level, looking like it's going to continue moving higher here. AbbVie, I think oh, we didn't look at AbbVie. AbbVie, you know, their portfolio is interesting, but I don't think there's anything in here that particularly is very strong. You know, what I don't particularly like is the fact that as the stock tries to grind higher, momentum continues to move lower. That's usually a bit of a warning sign that you're near a market top here. Weekly chart looking okay, actually fairly strong here. Money flow on the weekly chart looking fairly strong. So it is possible that this stock starts reversing higher, but getting rejected at 100 and momentum really waning, that's a concern to me. Okay, so I think I've covered as many questions, as many of these as I can. I do want to try to answer a few questions if anyone has some questions. Let's see. If I want to buy Apple calls tomorrow morning right after earnings, I fear the volatility crush. Ed, the volatility crush is already over. When you buy it tomorrow morning, there's no more crush. The crush is already over. The crush is only if you bought it before and you're holding it through earnings. So there is no more volatility crush. Read that win will beat earnings. So beating earnings doesn't mean much these days. There are a lot of stocks that have beat earnings that still move lower. So, I mean, if you look at the Intel trade, I mean, they beat earnings, but that doesn't mean that they're going to do well. It's more of guidance right now that's driving stock performance. Can you give insight on work? Slack? Slack has, so I don't like Slack. I think they're going to, you know, it's a small company. It's hard for them to compete with Microsoft. They don't have they have the collaboration, but they don't have the Zoom features that Microsoft has built into Teams. And I think this might be a top here for Slack. Should there generally be correlation between IV and implied stock move? If so, does the significant difference, for example, 80% IVs but 5% implied move indicate potential opportunity given disconnect? Not necessarily. There is a correlation, but not necessarily, because implied move, so you're saying that it has a very high IV, but it has a low implied move. So this is really where, you know, some of my concerns about investors who use IV alone to make their investment decisions. I've heard so many stories of someone telling me, oh, the IV on this stock is really high, so I'm going to sell credit spreads, or the IV on this stock is really low, so I'm going to buy debit spreads. And I think that's that isn't a very smart way to use IV, because unless you know how that IV is calculated, and I would argue that I think most investors don't really understand what's going into that IV calculation. Is it using 30-day options, using 90-day options? Is it using, you know, 6-month options? Is it looking at it over the last year? Is it looking over the last 3 years? There are a lot of factors that go into calculating IV percentile. Your implied move is only for the 1-week option. So you can have so you're not really comparing like for like here. So when you're looking at IV rank, most of the time that's looking at maybe a 45-day implied volatility. So when you try to compare a 45-day implied volatility with a 1-week implied volatility, and you see a difference between those two, that doesn't really mean a whole lot. So there is a general correlation, but the correlation may not be as strong as you might think. Can you please give us an idea one more time on how you set up your chart? Sure, I use a 20-period moving average and a 200-period moving average. Those are my only two moving averages. I use a 14-period RSI, so a standard RSI, just like anyone else, and I apply a 9-period moving average on that RSI to help me smooth out the RSI, because RSI is a very choppy indicator. And then I use a 20-period take and money flow, all standard settings for all of these indicators. What money flow indicator do I use? I use Chaikin money flow. How could a person do a link spread with one stock such as JP Morgan going up and HSBC going down? So John, you won't be able to do that just because there isn't a retail product for that, unfortunately. You would simply have to trade those as two separate trades and manage those as two separate trades. What indicators should we look at to see the money flow? So I use the Chaikin money flow. After hours SPY is going higher than 326. I would imagine that's on the Apple earnings, Apple and Amazon. So looks like we're gonna get a breakout here to the upside here for SPY, which is why last week during the hedging webinar, when so many of you said that you were bearish on the markets, I was trying to explain why I wasn't as bearish here on the markets. But we have been consolidating, and perhaps today with Apple and Amazon, that is the catalyst that the market needed to really, I mean, I thought this week was going to be a bit of consolidation because everyone was waiting on Amazon, Apple, Microsoft, all of these big names. And now that they've reported, I think you're likely going to see a continuation higher here for the markets. Sharon's asking, what can I do if both legs are in the money for a credit spread? Example, AMD, it went too far, too fast. Great question. I think many investors might benefit from this question. So it sounds like Sharon sold a call credit spread on AMD, maybe like a 65.70, and now the stock has exceeded both of her strike prices, right? So you could sell a put credit spread and the stock drops, or you can sell a call credit spread and the stock shoots through the roof. The answer is really simple. Close out your credit spread. There's nothing else to do. I mean, I will say there are some sophisticated investors who will say that I think that this stock's going to continue moving higher. And what they'll do is they'll remove the short leg, so they'll close out the short leg and they'll keep the long leg. And what happens is that if the stock keeps going higher, you can recuperate some of your losses. However, here's the concern with doing that. If you did that, right? So let's just say you have the 65.70 call spread, right? And the stock shoots through both your strike prices. If you try to buy back your 65 right now, it's going to cost you a lot of money to do that. Now, because you sold something for, let's say, $5, and now you have to pay $20 to get out of that. And what you have to do now is for the stock to continue moving higher for you to try to break even on this particular trade. But if the stock drops, now you've lost substantially more than what you originally had as your max risk on that trade, because now you've collected maybe $5 to get into the credit spread. Now you paid $20 to get out of your short leg, so you're down 15, 20, so you're down $15. And if now the stock was to drop, that long call option that was worth maybe $10, you lose another $10 on top of that. Now you've lost $25 when originally your max risk was only $10. That is the tricky part that you get yourself into, which is why I don't recommend that for most investors. So rule of thumb, generally speaking, when you find yourself in this type of position where you've sold a credit spread and it exceeds both of your strike prices, get out. That's the only thing you can do. I mean, and be mindful of the fact that you traded a credit spread that has a limited risk. You're limiting yourself to that risk. Get out. Don't add more risk to that trade. I've seen too many times where people try to get themselves back to break even, and this goes back to what I teach all the time about thinking about not just each individual trade. Think long term. Don't think short term. Short term is what gets you into trouble. Trying to turn the small loser into a winner is what's going to likely get you into much bigger trouble. If you think long term and you think to yourself, okay, this is just one trade, I lost it, it's okay, I can move on to the next trade, and you let that go, then that allows you to continue trading the next day. If you keep trying to turn small losers into winners, that's when you open yourself to a lot more exposure. Let's see. Wow, so many questions. Thank you so much, everyone. I'm really trying to get through as many of these as I possibly can. Dave is asking, how do you best play earnings? So David, I highly recommend you to watch that recording that I just sent everyone to YouTube. I have a whole webinar on the strategies that we talked about on how to play earnings. Balu saying, do you have any plans of providing education and trade ideas on options on futures? So, I mean, I'm actually doing, so if you're talking about the small exchange, I just had a conversation with a small exchange here earlier this week. We are going to put together a plan and providing education for the small exchange products, but that is still probably going to be a couple of months out. But that is something that I'm actually quite excited about. You know, my background is actually, I started trading derivatives, trading futures. That was how I started with derivatives. And I traded ES futures for those of you that trade E-minis. And really, for the most part, stuck to the E-minis. But many problems with futures products is the fact that the contract sizes are all different types of sizes, different tick sizes. A lot of people get confused with trading them. So the small exchanges created these new futures products that I think are much more suitable for retail, both from a sizing perspective and also just from a product perspective. So I'm really excited to learn more about the small exchange and potentially start offering education on that front. Let's see. What are the 3 lines on the chart? It's just a 20-day moving average with a envelope applied to it. It's a 1% envelope because I don't like to use, you know, a crossover of a moving average, because many times a stock can move just a couple of pennies below the moving average and then cross right back above it, and that counts as a signal. It's not really a signal, so I use a zone, if you will, and it's just a 1% higher or lower off of that moving average. Ed, I think I answered your question. Do you think pot stocks are ever going to take off? In the current environment, there's really no catalyst, in my opinion, that sees pot stocks moving substantially higher. If you look at Canopy, or I'm sorry, Aurora or Canopy or any of these, this chart looks really miserable, and I don't see a catalyst for these stocks to move substantially higher here at the moment. What's a good neutral stock to play straddles? That's a great question. I don't know. You know, there are you know, indicators that some people use. They use a combination of a Keltner channel and a Bollinger Band, and the Bollinger Band's inside the Keltner channel. That is a consolidation range. But I would argue that's probably the worst time to sell a straddle, because when things are neutral, that usually means that there's a higher potential of a big move. So most of the indicators that you identify a neutral market in is actually contrarian to selling a straddle, because when you've identified a neutral market, that is when you have the highest probability of a breakout one way or another. So I don't play straddles for that reason. Usually you only sell straddles on stocks that have usually made a big move. You know, it tends to be stocks that make a big move are the ones that consolidate, you know. So when you notice a big move and momentum starts to slow down, that's when you want to sell a straddle. I think I've talked about what indicators are on my charts. What is a broken butterfly? Is it worth using? A broken butterfly is either just not buying that fourth wing. So if you're looking at, let's see if we're looking at Facebook here. A broken wing butterfly is really just, let's make this a little wider so you can see it. It's just canceling one leg, so you have what looks like that. Or a broken wing butterfly sometimes is referred to when it's not a balanced butterfly. So you could do something like that. That is a broken wing butterfly. So you have risk on one end, but no risk on the other end. A lot of people like trading those types of strategies. Do you recommend taking profits at 50% for naked puts and cover calls? For naked puts, yes. For cover calls, generally the cover calls, you can hold on to them for a little longer than 50%. We usually get closer to 75% for that, but 50% for naked puts, absolutely. Gabby, are you on wealth charts? You know, OptionsPlay is also available through wealth charts. So if you're on that, yes, you can see OptionsPlay on there. Is it better strategy to buy 5 vertical spread contracts on a single stock or 5 contracts on 5 different stocks? Joseph, we generally will tell you to spread your risk around, meaning don't put all your eggs in one basket. So you shouldn't necessarily just take the money that you normally would distribute across 5 different strategies into one single trade, because then you just have too much concentrated risk. Oscar is saying, hello, Tony. General question. What are your best suggestions on learning how to trade options? What would be a path and or direction to go forward? Do not know how you are determining how to make your trades. Oscar, so we have a whole course available to you on YouTube. So I recommend that you follow us on YouTube. We have beginner, intermediate, and advanced courses. I suggest that you start with the beginner course. That's the best way to start your learning process. We built these purely for that. David wants the earnings trading link. David, if you can go to YouTube. So are you not in favor of adjusting your strategy? So Bill, I'm a huge proponent of adjusting your strategy, but only when trades go in your favor. When trades go against you, best thing to do is cut your losses, move on. I have a whole webinar talking about the difference between adjusting losers and adjusting winners. Focus your time on adjusting winners, because that's when you can turn a small winner into a huge winner. When you're talking about adjusting a losing trade, the best scenario is you turn a small losing trade into a small winner. That's it. It's not worth the time to do it. You're adding on more risk, which is never a good idea. And we just don't recommend doing that. So let's see here. Trading earnings, here we go. So I just posted a link into the earnings recording. So please follow us on YouTube and you'll be able to see all of those. Joseph is saying, currently I trade vertical spreads only. In order to balance the portfolio, should I necessarily use other option strategies? No, not particularly. You don't have to use all the option strategies by any means. You could just stick to one all the time. You should stick to the ones that you're comfortable with. Will you give a heads up when the derivative futures webinar is ready? Absolutely, Michael. We always send you the schedule for the whole month ahead of time. We also remind you every single week what's coming up. So we will definitely let you know. What is the limited risk on a credit spread? The amount of premium you receive? No, the risk on a credit spread is what's left of the vertical spread after you've collected your premium. So if you have a $5 wide credit spread, and you're collecting $2 of income, then the $3 remaining is your total max risk. No matter what happens, you cannot risk more. You cannot lose more than the $3 per contract. Can you please explain the plus or minus number in the option chain? Is it probability of going up or down on dollar amount? So I don't know what options chain you're looking at, and I don't know which data point you're looking at. So if you want to send me a screenshot to email it to me at info@optionsplay.com, make sure you include the header of that column, or else I really wouldn't be able to comment. Why do you use the 200 moving average instead of the 50? There's no reason. To be perfectly honest, it doesn't matter which moving average you use. From my 14 years of technical market strategy, working with retail and institutional clients, it really doesn't matter which moving average you use. What matters is that you use the same moving average every single day, day in and day out. So if you like using the 200-day and you like the trading using the 200-day, use that, but stick to it. Don't use the 200-day today and then the 50-day tomorrow and the 20 the day after. Find one that you like, where you get enough signals for the trading that you're trying to do. So if you're a short-term trader, use a shorter day moving average. If you're a long-term trader, use a long-term moving average, but stick to it. That's it. Stu's asking the max loss of a debit spread. The max loss of a debit spread is what you pay. So whatever you pay for a debit spread, that's the most you can lose, because the most that can happen is that what you paid goes to zero. How's the ratio between VIX and VIX 3M going? It's going absolutely nowhere. So as you can see, VIX 3M divided by VIX, it is still trading around 1.2. So it's well above that zero line that we were talking about. how do you define momentum? So we usually use RSI to determine momentum. So RSI is my primary determination of momentum. What are your guidelines for exiting most strategies? Each strategy is different, Rich. So that's why we have webinars on each strategy, and we have the rules for when to enter and when to exit on each one of those webinars. It seems that all major central banks are doing the same thing with the Fed. Why is dollar weakening against other major currencies, not the other way around? That's a great question. I'll be honest, I'd have to do a little bit more research on that. I really just think it comes down to the size of what we're doing versus the size of what other central banks are doing. Look at what the ECB is doing. They're doing about half the size of easing that we are. So that's part of why I think the dollar is weakening faster than the other currencies. Which video cover exit strategies on spreads? Brad, so if you look at the videos, there are credit spread videos, there are debit spreads videos. Each of them will have exit strategies. Sunil, great webinar, always looking forward to it. Quick question, if one has a call butterfly with all legs in the money worth 0, would you close it before expiry or let it expire and it will net to 0 upon expiration? So Sunil, a call butterfly that's all in the money. So you do have some in the money calls. So I would close it out to avoid potential assignment issues that you might have. PFE has a long time with the squeeze. Is it time for a breakout? I was looking at the same thing here. Pepsi hasn't broken out yet, but it looks like it's about to. But I mean, Pepsi's been in a squeeze for 2 months now, 3 months now. So I would wait for that actual breakout. What strikes do you like on the MU credit spread? The 50-45 or 50-46 was the one that I was looking at here for MU. How do you feel about Square with PE ratio of 197? I don't like it. I'll be honest, I never really, this was a trade that I got wrong, right? I shorted Square during the coronavirus because of their exposure to physical stores. They've done very well. So hard to bet against it, but 197 times earnings seems pretty crazy to me. Even where it was trading before seemed crazy to me. But a lot of valuations right now are crazy. Okay, I think that covers most of the questions here that I've covered here today. Joseph, your question about a subscription, I'm happy to send you an email about it. So if you can send me an email at info@optionsplay.com, Joseph, I'm happy to break down for you what you get as part of your membership. Dave, thank you very much for your YouTube link. I'm super interested in how you can be so knowledgeable about so many strategies, companies, etc. So David, thank you so much. I really appreciate it. It really just comes down to, I've been doing this for 14 years. I do a lot of reading. I spend pretty much all of my free time reading about this type of stuff. And, I love doing it. And that's part of what makes it easy for me, is the fact that I really love doing that. A max gain on a debit spread. So whenever we're talking about spreads, right? Whatever you pay or whatever your max risk is, the rest of it is your max reward. Whatever your max reward is, the rest of it is your max risk. That's the great thing about spreads, is that they're really easy to calculate. You take the distance between the two strikes, either you're collecting it or you're paying it, and whatever's the rest of it is going to be your max risk or max reward. So really easy to calculate. So if you want a refresher, please watch those YouTube videos on debit spreads, credit spreads. I have them separate for you. So if you want to learn more about them, we even have some videos on comparing debit versus credit spreads, because that's also a common question, is when should I trade one or the other? Markets are irrational. Only way to survive is to play probabilities and exercise risk control. I couldn't have said it better myself, Bill. Risk control is by far the most important factor that I have noticed in my 14 years as a market strategist, is what sets successful traders apart from others. It's not your strategy, it's not your indicators, it's not the amount of research you do, whether you use fundamental or technical. None of that stuff really is a discerning factor between who's successful or not. It's the people who spend their time managing risk, thinking about the infinite game, not the finite game. For those of you that watched my video on trading psychology, I dive into this very deeply about the difference between infinite versus finite games. For those investors that focus too much on the finite games, those are the ones that are frustrated and struggle and month after month, have small winners and then followed by one big loser and kind of lose all their their profits, you know, after months of clipping away and having that one big loss. The investors that are focused on the big picture, the infinite game, focus on risk control, managing their portfolios rather than individual trades, those are the ones that I see that are most successful. That's the determining factor over my 14 years that I have found. So that's why when people ask me, how do I set up my charts? What indicators do I use? What my strategy is? I always tell them it's not that relevant. You know, find your own strategy, find one that you can understand, find one that you can connect with, find one that you can, that you love, because that's what's going to allow you to continue to follow that. But what you can't, but the absolute fundamental factor that does make a difference is your risk management. So make sure that you spend the time reading that. I'll actually, before we log off, I'll just send everyone the link to that video, because I can't stress enough how important I think that video is for those of you that may find yourself struggling with, you know, getting profitable or you know, finding that groove of you with trading and feeling confident with your trading. This is something that many investors struggle with. So I really want to make sure that you guys have an understanding as to how to utilize this. So I'll share this link to everyone. Again, Trading Psychology, How to Succeed in Options Trading. In my opinion, one of the most important lessons to learn. So thank you so much. I hope you guys have a great afternoon. I will send out the recording with the slides after we finish here today. And I hope to see many of you tomorrow morning at 9 a.m. where we're going to do another market outlook session and share some ideas with you. Okay, thank you so much. Have a great evening. I'll see you guys in the morning.